Hello, everybody. This is Mickey Mao with CartoonMoneyPrinters.com. I am joined today I never get that right, with KerMixAlot and Astronaut Toad, but it's going to be KerMixAlot's show. We're going to go over the concrete bar rules. Today is March 19th, 2025. It is a Wednesday hump day. I hope you're all doing well, and without further ado, why don't you go ahead and take it there, Kermie?
All right. Thanks, Mickey. Appreciate it. Hey, guys. All right. So I'm going to go. I'm going to start with shorts today. This is, I don't usually do. It's basically copy paste for longs, just, flip. But I want to go through each rule on taking a swing trade and then look at maybe a couple examples. I'll probably try to stick with Bitcoin as much as possible. So the first rule is the 1530. Now, I'm not going to go over continuation trades right now. This is getting the this is looking for the best entry for a short swing using the par. All right, so the first thing I want to do, let me go to this setup here. All right, so I have two setups, and let me bring this down so we just focus on the par. Now I'm not looking at levels right now, so obviously you use whatever levels you're using: fibs, order blocks, FVGs, gaps, and then you look and see if the par is setting up for you. So I'll go over what we just had on Bitcoin, and I'm still in this short. It was just a scalp. I think that we're going to come up and offer another entry for a swing because of how quickly the 1530 came down. But let me show you what entails for the 1530. Okay. So when you're looking at for swings, you want to have the 1530 up here, and that's the yellow ribbon, and I have the 60 and the 240 as background. And you see the legend here, the setup: 1530, 60, 240. And then I opened up the indicator again for the larger time frame. And when I say larger, it's just, larger as far as in scalp day trade terms. But it should give you the good entry for a swing if you like your levels. All right, so for the next one, I have the 6120 set up as the yellow ribbon, right? And you can see that we have a bear div right here. I'll go into that a little bit later. And then I have the 240, 280. Thanks, Astronaut, for the number combos on that. And that's for the higher time frame. I'll get into that as well, what you're looking for. Then I have the 960 and 1440, just to see the overall, a little bit more macro trend. All right, so the first rule is the 1530, right? You want that to have a short signal, okay? I will show you the short signals. Let me see if there's any from earlier. Okay. So, first of all, the 4 hour, right? You want it to be either flattening or in the overbought zone, right? So, this whole time, there's no reason to take the short, okay? It's not flat at all. I mean, I'm only on the 15-minute. The 1 hour is going to be even more steep, right? So you can look at 15-minute, 1 hour, 4 hour. But look, that's definitely just a straight shot, right? You could have rode that the whole way. All right, so let me go back to the 15-minute. Okay, so nothing. Now the 4 hours up in the overbought. So now you start looking, right? Well, obviously this is not a signal. The 1530 is way down here. Here it was not. It was not a bear div, right? Could have taken that, right? And that was right before FOMC. It was also a very risky time because of the FOMC meeting. Anyway, but right here, as the floor is getting into overbought, you start looking, and right here, the ribbon hit overbought. Okay, so 1530 wise, this is a signal.
You just cut out. Was that me? Are you guys there, astronaut?
I got everything. It's good.
Yeah, his audio.
Oh, what? Okay.
You cut out.
You okay? Am I okay now?
Yeah, you're okay now.
Okay, good. All right. So that's box number 1 is checked. Okay. This is a signal, right? But you can tell by looking at it, it's probably not going to be great. But that's just one, and then we need to go through the rest. Okay. So the 1 and 2 hour, right? You need to have all 4 pointing down for it to be a legitimate entry. And right here, the 2 hour was moving up. Okay, so already we got 1 strike on us, right? So the first rule, the 1530, was a check. The second rule, the 60-120, right, that's an X. That's a strike. That's not there. So you don't have a bear div either because it's still moving up. And then the third rule for the short swing is that the 12 hour you know what? I have to change that 960. Let me change that. That's got to be 12 hours. That's 720, right? Check my math on that. 720. Good. All right, that's going to change a little bit. Okay. So, the 12 hour is moving up, and it's not in the overbought. Okay. And that's why I'm not crazy for Bitcoin for a swing short just yet. Okay. The 12 has actually gone up a little steeper here. Okay. So the third rule is checking the 12 hour. Okay. And what would make it acceptable for a box to get checked is the 12 hour is either flat or it's in the overbought. And right now it's neither. Right. So that is an X. So that's why I'm scalping. I told you guys on the stream before I started. All right, so number 4 is you want to wait for a 1 hour close. Okay, that's not anything we could check now because we're only 11 minutes into the next candle. So as of right now, I don't have a legitimate swing entry on Bitcoin. Now, it could, fizzle out here and come down, sure, but at that point, the 12 hour should flatten out, and then I'll be ready for a swing trade. But right now, there's no swing trade.
And just so everybody's clear, the 12 hour is the purple 1440. On the bottom right of the indicator, you can see the legend. The legend is measured in minutes.
Yeah, the 12 hour is a light blue right here. Yeah, so...
All right, but yeah, my bad. It's the teal 720.
Yeah, purple is the daily.
Yeah, my bad.
Yeah. And that's really it. Now, one of the nuances on a trade is that you don't want the lower time frame, right? In this case, it's the 1530. You don't want that to come too fast and get too far ahead of where the other yellow ribbon is, the 6120. So you see that fast move? Well, that was why I TP'd. Also because I was getting ready to talk on here. But, so that's not ready yet. Now, let me go... I go to my other page, but it's... I gotta get rid of all the... Gotta shut down all the pivots and stuff. Okay, there we go, it's cleaned up. Okay, so for the short day trade, the first rule is, or the first thing to look at is the 510 to make sure that is giving you a signal. And let's look at the scalp trade that I just did. Okay, this should check all the boxes. Let's just make sure. Okay, so not a bear div, all right, but when you have the ribbon, okay, you might want to write this down. When you have the ribbon in overbought, again, we're just focusing on shorts, and the 5 crosses the 10, right? You take the trade. Hold on. Wow. The washing machine is really loud. You take the trade at the moment the 10-minute starts to go down. Okay, and on this, since it's scalp, I'm using a 5-minute close. And then for confluence, you want the 1530 to also give you that short signal, right? The 15 crossed the 30. I didn't wait for the 30 to go down because I'm scalping, right? So I just simply took it here. My entry was 87.1. It was up here. And then I just put the stop. The first candle is a little bit, a little bit hairy. You gotta wait for a couple more candle closes to really get confirmation. And then I just put the stop over the top of this wick, and it wouldn't have been much loss at all. But the 510 gave confirmation. The 1530, right? The 15 already crossed the 30 when that was happening. Hold on one second, guys. Somebody's making some noise. Hold
on. Shut up! Shut up! I'm working. Just start screaming. I wonder if he's getting swatted. There's been a bunch of swattings happening lately.
Sorry about that.
You're okay?
Yeah. It's the vacuum, but it was really, like, echoing.
Yeah, it wasn't coming through on the mic, if that's...
That's probably what it is.
No, it wasn't coming through on the mic.
No, I know that, but it was just really loud to me. All right, so then the next thing is, instead of looking at the 12-hour, you want to make sure that the 1 hour is either flattening or it's way up and overbought. So we actually had both situations here. Actually, the 1 hour was already turning when we got that peak right here. So that was a check on 1. All right, check on 2, check on 3, and then the fourth thing is that the 5-minute closes. And let me go to the 5 minutes so you guys can see what I was looking at. And then it doesn't hurt to make sure you're looking at a reversal pattern on the candles as well. All right, so here. Let me mark it out. 5-minute close. Yeah, right there. Okay. So, yep, as soon as that closed, you take it. Right? It was a nice par gap with the 5, 10, and 60. So that kind of solidified it even more for me. And the only thing that I had to do after I got in was just kind of wait for that 30 to start to drop. And the whole time I'm waiting for that, the 510 was coming down beautifully. So I was not concerned at all.
One
Right?
thing I want to point out too is that entry that you're pointing out right here. Even the money minter is a little bit lagged. So the par is like superior in your method in finding the entry, the optimal entry.
Okay.
So if you if you go back to
this would have been legit on the money minter right here, right? The next one.
Yeah, exactly. Exactly.
Okay.
But look at the price. Look at the price. Like go back to the full. So
it's not too bad.
Yeah, your entry from your rules is a candle before the entry for the money minter.
It's $150 difference on Bitcoin.
Yeah. All I would say all, if not most indicators are lagging indicators, and so what you want to do is try to get closer to real time. And I feel like the par is superior in that.
Now let's go back because I did. Well, this one was successful. I did have a false start earlier. This one right here got me, right? But let's see where I might have rushed it. Okay, and I can see where I made. So the 510 was good. It made a nice peak up. It made that V. The 1 hour was overbought. The 1 hour was still kind of trending up, but you know, if there's a couple candles down, that's going to turn, right? So that's not always a deal breaker. But here was the kicker right here. That I was going against the 30-minute line, and it was coming up pretty good, right? So technically, the 15 doesn't cross the 30 until here, right? So I should have waited. I think it was just that's 7 o'clock. Yeah, that's when I'm putting the kids in the bed. I'm like, oh, yeah, let me take it. So I got out. If it's not working like within a couple candles, you see how it just kind of went sideways. I just got out. You know, kind of got skimmed a little bit. But that 30, right? Now the 15 crossed the 30, so now you wait for the 30, right? And right here, it was flat, right? But because of the 510, that kind of gave me a little bit of, future look at what I think is going to happen with the 30. Plus, it's way up here already. And we, like Astronaut said, we have a nice par gap right here. I mean, this is beautiful.
I got one more thing to add to Confluence there. If you look at the 5 minute, you get your bear div.
Oh yeah, from here to here.
No, other one down below the purple. Yep.
Oh, you're right. Yeah, the 5 minute line. Yeah, I totally missed that too. I'm gonna say say that for a nuance. Is that divs will always solidify more confluence. But good eye, Mickey. Thank you.
Thank you.
But I was looking at the 5 up here when I took the trade, but it was kind of in the back of my head. The main thing was this kind of gappiness right here, and it was also rejecting the yearly pivot, but I don't have the pivots up. But yeah, so what might happen now is we have a wide CPR for tomorrow, so I think we're gonna get some sideways choppy action. So definitely at some moves up, I'm gonna be looking for some better shorts. But that was for the bear. Now let's look at the longs. The rules are exactly the same for the swing. You want the 1530, the 6120. Let me go back to the other template. Okay, here we go. Okay, so you're just kind of, doing your stuff throughout the day. You're seeing this 6120. You know, no trade, no trade, no trade. But you're interested right here, right? But the 12-hour was coming down and the 4-hour was coming down. Now I have a question, Mickey Astronaut. Do you think for the swing that we should look at the 4 and the 12-hour to be either flat, oversold in this case, or going in the right direction? If it's going in the right direction, you're golden.
For the swing, I don't know. It's if you're trading on the 15 or 5 minute, having the 4-hour and 1-hour is pretty much the trading times that you're looking at. But I like to look at the daily, and I'm just focused on those swings.
Right. I mean, you're looking at the daily par, or you just your daily charts.
The daily charts, yeah.
Okay. Well, the daily was coming up when you got this nice V. Right. So that was a divergence gap right here. But this is a long signal. I'm on the 1-hour right now. Let me go back. Oh, well, back here was where I got in my initial trade, but let's take a look here. Okay, so let's go through the rules, right? The 6120, right? 15 or the 60 cross the 2-hour, 1-hour across the 2-hour, and the 2-hour turned up right here on the 1-hour time frame. All right, so that's legit. This checks rule number 1. Now let's go to the. So when the 6120 is down here, that's where you kind of just go, you know what? The 12-hour was actually trending up at the time, so that's where you can kind of go, all right, that already checks the box. Now I'll watch the 1530. Now, this deep B, as soon as that starts to turn, I can take those all day long because that's way overbought, oversold, and it went actually into the abyss here. So as soon as that turns up and I get a 5-minute close going the opposite direction, you can take that. However, you want to be safe and wait for the bull div. Now I need to zoom in. Let me go to the 15-minute. And where was that? Around the 79 mark? I gotta go back a little bit more. That wasn't here, right? It was back more. Yeah, here it is. Okay. So on the 15-minute, right? Got the, this is already legit enough, but let me do a trend line for the bull div. Did not select trend line. All right, super steep move up on a high or low there. And the price barely budged. Right? So that's, in my eyes, that's a hidden bull div. And the second that 5-minute close, or you can wait for the 15-minute close, there's your trade right there. And this candle after you take it, the 4-hour was starting to turn up, and the 1-hour already was, right? So that's number 2 rule checked off. And then with the, for the scalp day trade, the 1-hour just has to be going up, and it was, so that checks that off. And then you just wait for the close, right? And that's your 4th thing, is you just wait for the close. So, any questions on that? So basically, it's really just 3 things that you're checking off, and then you wait for the close, and that's number 4. It's really that simple. And this was a good example of a scalp that turned into a swing, right? So after you take the scalp, you're in it, right? You got your stop below, swing low. Then you can come and look here, right? And that 4 hours moving up, right? A couple more candles later, 12 hours moving up. Now it's gravy, right? And the good thing here is the 6120 didn't get away too fast. I mean, it's just barely creeping back up over the, that's not 12 hour, that's 960 again. I forgot to save it. Sorry, they're close enough anyway. Let me switch that again. And let me save. Okay. All right. So that's it. It's pretty simple. For the swing, 1-hour close. For scalp / day trade, 5/15 minute, right? If it's something that you want to hold on for the whole day, I think 15 is a little bit safer. Or you get in the 5, and as long as it doesn't reverse on you real quick for the next 10 minutes, you're usually golden. And then you have a day trade signal.
How long was that trade that you were just looking at?
This one here?
Yeah.
How long did it last?
Take the measuring tool?
Yeah. Okay, where do you want me to go to?
Like where you would enter and where you would exit, obviously.
Okay, well, all right. I'm gonna follow along here. Here's the 2-hour, right? Going up, 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 up. Oh, okay. Now we're in overbought, right? But you know, the 60's moving up. There's just no reason to do anything. Nothing. And then here, they both turn down. So that would be 83 bars on 15.
20 hours.
That's 20 hours.
Almost 21 hours.
About 21 hours. Yeah. Yep. And if you know, once the 60 went into the abyss here, you know, into the dark void, you could have taken it there. I mean, if you got out once it was in the dark void on that close on the 15-minute, 84,727. From here, 83.63. Yeah, so $4,400 move. But if you waited for the turn, I mean, you lost nothing, like $100. $100 move. No. And I'm happy to TP mostly everything right here, because it's way away from the 12-hour, Right, that is a huge divergence gap. All right, now
Can you measure the risk reward of that trade if you had gotten in there and put your stop loss below that lowest of the swing low, and then measure the risk reward on
You
that?
do it with the position tool. It's right there.
Yeah, I know.
Yep.
All right, so here, hold on. Let me make sure I got the signal. All right, let's do it from this one. That's because it's the safer one. All right. So let's say here is the entry. All right, be conservative, middle of the candle. Now the question is, right, or the thing is, and this is where astronauts helping me out a little bit here. How do I know where to put this? That's the question. And that's where I, could use a little help sometimes. But here would have been my stop, and it's usually eyeing a little bit of a cushion below the swing low.
Grab that right square and drag it to your exit.
Let me go up.
We're all a little OCD here.
That's
Yeah.
so true.
What is that? 5 to 1, 4.8 to 1.
7.14 risk reward. That's fantastic.
But
Okay, so what I would look at is if you want to be conservative about your exit, you could look at that recent swing high and target that.
right here.
Yeah.
Okay.
You could
let's see
draw a
what that
line.
would have been.
Yeah, you could draw a line over. By the way,
That
if you're dragging the up down, you can actually move your mouse way over to that level and just magnetize it to that key level. While you're dragging up and down, move your mouse over without letting go of the mouse, and you can magnetize it to a level that is not in the same area. So start dragging it up and down.
Okay.
Oh yeah, you don't have your magnet on.
No, I'll get it on. Hold on. Okay, here.
I just do weak magnet.
What's weak magnet?
You can choose different strengths.
Oh, okay. Wow, I didn't even know that. All right. Okay.
So, yeah.
You want me to go over here?
Yeah, see how it snaps to your key level there? That's a helpful tool that I started doing recently.
So that would have been.
But so yes, that's a 6.0 something risk reward. That's fantastic. So basically,
you like recent highs, and then and half of that would have been obviously 3 to 1, which is nothing wrong with, and that could have been where I would have TP'd 1, and that would have been right at the 50 EMA here, or the 200. Sorry, the 200 on the 15 minutes. Right? But
yeah, that's what I've encouraged people to do is think of their trades in terms of risk reward, especially if you can close half of the trade or 30% of the trade or whatever at a 1 to 2 risk reward ratio. Well, then you've already covered your whole trade and locked in money in your pocket, even if it hits your stop loss. So that's why I love holding out for a 1 to 2 risk reward. Because if you get 1 to 2 risk reward and you close half your position, you have locked in half of the profits to that point, which cuts your stop loss in half that value as well. So now you're only risking half of a risk factor, but you have locked in one whole risk factor. You know what I mean?
So, yeah.
Say you try and risk $100 on every single trade, and you chose your leverage and position size such that red stop loss is always $100.
Yeah.
If you close half that trade at the 1 to 2 risk reward, then you've locked in
200.
You've locked in $100.
100, and then you got your stop at break even.
And then the stop loss is now not $100, it's only $50. So no matter what happens from then on, you're good.
Right.
And then you just let it ride.
So there's something that I'm kind of noticing, and maybe it's just the past week or so, but it seems like every good play starts with a manipulation move down, and then it reverses. Because what I'm trying to say is, I studied Investor Business Daily with stocks like many years ago, and he always talks, or one of the things, he was the guy that I really got good with, like the cup and handles and everything. And then there was another trade where it was a base trade, where the entity is just making a base, right? And then just, right? So in this case, well, I guess you could always look back and see where one of the old highs was over there. But you don't have this manipulation distribution situation on a base breakout. So that would be a question there, is like, where would you, I guess you just go back and look at some of the old order blocks or gaps or old resistances to for it to move up into, correct?
Yeah, it really is a matter of, you are going to try to pick your exact setup, whether it is an engulfing candle pattern or a retest candle pattern, or a fair value gap that gets inverted or disrespected, or a break of structure or market structure shift or whatever. You're looking for some sort of small scale pattern that gives you that additional aspect of entry. And this does mean, back to your point, that sometimes you're just going to miss a trade.
Right.
If you want to be very strict and say, I only enter if the setup has a liquidity grab or whatever. Because if that happens, then you are only you're only allowing yourself a particular type of divergence. See right there, what you've got is the entry low is not a lower low, it's a higher low. Which, if it had
this trade,
yeah, that main one,
right,
you know, there's that second dip is not a liquidity grab below. So you might miss that trade if you are strictly only trading liquidity grab trades.
Right.
But with how you're looking at the par, it gives you a little bit more flexibility on when to enter and say, okay, I know based on all of these different time frames that I'm looking at, I know that I am good to have an entry.
Right.
Even without the entry pattern that you really want to see, such as that other divergence that you drew out. You know, that's got a big old divergence, and then it also grabs liquidity down below one more time, which I don't know if the par is giving an entry signal there, but that's a great example of.
Well, yeah. See, right here. Well, this was my entry that I posted in the group, 77.3.
Yeah. So you got in at 77.3.
Yeah, I think I posted it up there. Yeah. Let me look.
So was it just purely based on the par, or was there any sort of candle pattern, you know, like that doji, the hammer doji, that gave you like okay, this is the final confirmation that I'm going in at the close of this particular candle? That's the one thing I took notes on the whole strategy. And that's the one thing I want to nail down is there like a candle or anything?
My entry was 77.024. And I may have tried this. I have to go back in the records. And then I had to get out quick because of the 1530 got away way too fast. And technically, the 4 hour was coming down at this point. So, even
that 4 hour could have. Yeah.
I played this. I'm pretty sure. Yeah, I played this. So even after I got in, I saw the 1530 going up, and I'm like, man, the 4 hour's not really going anywhere. right? Now, if you go back in real time, it may have looked like it was kind of flattening out a little bit, but it was still struggling, right? And that's the key. You kind of want things to go together, and then as soon as this turn, that's where you definitely go, okay, TP, or just get out and wait for it to come and retest. I love when they come and retest right here, the 1530 retested the 4 hour, and the second that turned, right, you get in. Now on the scalp, it was probably even more clear, and I might have just saw it bouncing and said, okay, this is close enough. Got in, and then after 1-2 candles, because it's gotta, when you do par plays, especially from overbought, oversold, you want them to work within 2 to 3 candles. That's I should probably add that to the rules as far as like the nuances, or maybe just a rule.
Say that again clearly with the thing you want to add.
You really want the first 2 to 3 candles to confirm your bias, your direction.
On your entry time frame, or
yeah.
So so you mean like the 5 or 15 minute? You're on the 30 minute right now.
Yeah, let's look at the 15. Go back to that.
That's one of the things I want to nail down is people are going to want to trade different time frames. Like we all have a different level of patience or risk tolerance, and so I'm trying to write down these rules while taking into account that people might be entering on the 1 or 5 minute instead of the 15 or 30 minute if they're scalping way faster. Or if they want to swing, they might be entering on the 30 or whatever.
Right now I have three nuance rules that aren't really in the checklist. One is that divergences will always solidify more confluence. And then the next one, you really want the first 2 to 3 candles to confirm bias and direction after trade. Right? I'll put that after entry. And then you don't want the lower time ribbon, because if I'm doing day trade, I'm looking at 2 ribbons. If I'm doing swing, I'm looking at 2 ribbons. You don't want the lower one to get way too far ahead of the higher one. Right? So, for example, here, the 1530 really started to go, but the 1 and 2 was following, right? So, if the 1 and 2 were kind of, let me show you something here. If the 1 and 2 just kind of went like that a little bit, then I would be TPing much harder up here. You understand what I'm saying?
Yeah.
Because that would be a major divergence between the 2 time frames, and I may not have the perfect mathematical equation of the difference between the ribbons, and that's where, if any of my autist friends, if you got a better idea mathematically of prime numbers, square roots or whatever, I'm all ears for it, and we'll back test it, right? These aren't perfect, but they work, and if it ain't broke, don't fix it. But yeah, if you guys got numerically a better reason to use different times, like maybe the 5:10 and 15:30 is too close. I thought about that, but I really feel like they're working and they're jiving together. Now I got the 15.
I've actually been testing that recently, yeah. So I have some insight that I could give.
Okay, good. And what I was saying earlier, this is just kind of off topic, just a little bit, but let me go back out a little bit. Get off that. All right. So look at all the good moves in Bitcoin, right? Boom, after a huge move down. Boom, after a huge move down. I mean, it just keeps going on. It's almost like after every big move, you want to look for, right? Huge move down, boom, right? Big move down, boom. Big move down, boom. And it's just like over and over and over. It just keeps repeating. Big move down, when it reverses, boom. I mean, it's like it doesn't seem to ever go sideways and then move up anymore. It's like it's always huge manipulation and then reversal. That's just something I noticed.
Yeah,
so anyway,
that's indicative of liquidity hunting.
Yeah.
If you zoom out, that's probably a accumulation phase.
Right.
I keep hearing somebody's phone.
Yeah, I hear that too.
Oh, geez, sorry.
It's just like. Anyway,
let's look at the NAS.
Any questions?
Let's look at the NAS. Hold on, let's see if there's any questions.
Yeah, any questions from anybody else?
I think Magbane is typing.
Oh, okay. And Magbane, I've watched 3 different videos on candle range theory, and I mean, I don't know. It's just nobody is like speaking to me. It's like
it's internal liquidity, like I was talking before the stream. It's very similar to ICT. Price is gonna try to hunt internal liquidity.
Okay.
Which is essentially like an accumulation that happens.
Oh, but does the bottom of a candle always with a capital ALWAY always mean that there's liquidity there?
Well,
like,
no, but
if that's the case, then we should all be trillionaires.
No, because
I think that's
people have their stops lower than just the bottom of a candle.
Yeah.
I think it's a matter of patience and wait. We don't have enough money to push around. None of us have enough money to like bet the whole farm on one particular candle.
Right.
But on the scale of, if you're putting tens of millions of dollars into the market and trying to make millions of dollars, then generally speaking, you want to always pay the best price when you're going long and get the best price when you're bailing out, which generally speaking means you are entering below an entry price or below a low, a wick, and you are exiting above a recent wick or whatever. You're exiting above a high. You are inherently buying low and selling high. And if you look at the tick data from the CME, the Chicago Mercantile Exchange, that'll show you like range charts, where it'll show you down to the last fraction of a penny of a micro NQ.
Yeah.
You'll see that the tick chart is just going up and down, up and down, up and down from the bid price to the ask price over and over and over again, which is just a spread of a teeny tiny amount. But it's a microcosm, it's a vision into the fact that people with tons of money are always buying at the bottom and selling at the top. And that's just how they make money. That's how giant quantitative traders make tons of money, is they are buying below the lows, which is your stop loss, and they're selling above the highs, which is your short stop loss. And that's the basic of candle range theory. But the problem is that most retail traders are too impatient and erratic for candle range theory to be usable all the time, 100% of the time, by little traders like us. You can't just always trade a candle range and expect to make money, because it is infinitely erratic down to the tiniest like nanosecond of a, like you can look at the 1 second chart and see that this is playing out. So even if you're trading on the 1 minute chart, you still do not have like a 50-50 chance of winning or losing. You're going to lose way more often, because the subtlety of buy low, sell high is going down to the nanosecond.
Yep.
Sorry for being totally nerdy about that, but yeah.
It's all right.
I use candle range theory to trail stop losses, or to just stay out of, like, don't enter a trade until you're in a good position below, you know.
Right.
You don't have to use it as an entry signal, but you can use it as a filter to say, all right, the daily candle is this. Now on the hourly chart or the whatever chart, I am not going to long the top of this daily candle. I am only going to long below 50% of this daily candle, or short above 50% of this daily candle. And that's, you're just filtering your trades so that you're not looking for paying too much or whatever.
Right. No, it makes sense. And it's, at the end of the day, it's another level.
We have a question from MacBain. Am I the only one noticing that going down has been much faster than going up since the drop from 99K? Does that tell you anything?
Yeah, that's very normal.
Yeah.
Because people panic more on the way down.
And FOMO.
And in general, the market itself is designed to be gradually infused with money. You don't have people, like people with Coinbase accounts, they have options to DCA buy every single week or every single paycheck or whatever. So constantly at all times, there are people throwing $10 a month, $20 a month, $100 a month, $10 a paycheck. There are people throwing money at Bitcoin. So the gradual grind is always going to be up. The reason the downs are so nasty and quick is that they involve more impulsive emotional decisions. When it goes flying down, 90% of the trades are emotional panic moments. When it's going up, maybe the emotional impulse is only 25, 30, 50% of the time is the up move being an emotional FOMO, panic or whatever kind of buying.
And that's only if you're like in a position where you're like, oh God, I'm losing, I better get out. And so when you're that's for a short position, that is. If you're long, and then price spikes down like that, it's a cascade effect. Like it just emotionally, psychologically, it just cascades super fast. It doesn't matter what.
Yeah, you can look at the stock market, like over the years and years and years. Look at the stock market for like the last 30 years, and you'll see it's a gradual up with sharp, steep, nasty drops that are pullbacks or recessions. And that's just the nature of the beast. People are gradually throwing their money into it, and then the big giant winners, the market makers, when they take profits, they don't care. They just dump, and then that causes the panic and it goes straight down.
I want to make this point too. Even in our modern colloquial dialect, we have a term for it. We call it a crash. So the psychology is even in our language and how we talk about these events.
Very good point.
That's true. And another theory that I have is that most of the people betting on shorts are going to be more institutional and less individual. So it's bigger bets, and I think that's also why it goes faster too. Mm-hmm. Because I don't think retail really moves the market all that much.
I think here's one of the things that ties into what you just said. When an institution knows that they are about to take profits on selling on spot say that they have tons of Bitcoin that they're holding on spot. They own the Bitcoin. They have it in a hard wallet or whatever. They know they're about to sell $10 million worth of Bitcoin. What do you think they're going to do? They're going to open shorts. Yeah. And so they're profiting twice. They're selling their spot holdings and they are going short, which doubles the problem because they're selling on spot, so price is crashing. They're going short, so that constitutes a sell as well. And then that's why the down move is just bam.
And then it just eats the stop losses, gobbles the.
Yeah, because those institutions are taking some of their money and just gobbling it back up when it gets down to their key level that they want to buy at.
Mm-hmm. And you're talking not just tens of millions, you're talking like hundreds of millions in positions as well. Like that's when you see the really big moves.
Yeah.
So do we have time to? Well, we only got 2 minutes left.
I don't.
Do we have time to go through a setup? Because I was gonna say, I took notes on the whole thing, and if we want, I could pull up a different chart and just walk through my setup or walk through my notes, and you can grade my setup based on what I find.
Yeah,
I'd love to do that.
Let's do that.
You want to end the stream?
No, we'll keep the stream going because this is going to be a concrete educational video that'll be used as a tutorial. So yeah, Astronaut Toad, do you want to stream your screen and then we'll watch that? And then let's try to do it within 30 minutes if we can.
Yeah.
Yeah, I think I can rock it out in a few minutes.
I can commit to 20. Yeah, share your screen. Everybody go to Astronauts.
So,
yeah, make sure you have enough bandwidth.
Everything changes.
Yeah, I'll stop watching Kermit's screen. Okay. I was looking at MNQ recently. Ooh, that's nice. That means I'm in profit. Lovely. Let's see.
Oh, your stream is
I
dead.
see that. Oh, I'm still here.
Yeah, you're here, but your stream isn't up.
Okay, it must have cut out when I stopped watching Kermit's stream. All right, here we are.
All right, we're good to go.
Okay, NASDAQ, par, and pivots. I got the little golf hole icon for the par and pivots, just because par, you know.
That's cute.
So yeah, there's that.
All right.
That's fantastic.
So I was looking at NASDAQ because NASDAQ just seems to be a real tough cookie to play. But I have something right here that I do want to look at.
Do you mind doing the vertical line? It really helps me.
Yeah.
Like putting it away?
Yeah, I'm going to hide the volume. I'll draw a vertical line. So, well, I'm going to go through my notes and the whole thing really quick and just say, here's what I came up with. Like, ooh, there's a teeny tiny pivot, CPR. Nice. The first thing I want to do is I'm using just 3 time frames instead of 4. But what that means is, oh, squeeze started. Market smasher. I'm starting at my biggest time frame, which is going to be the 4 hour instead of the 1 day.
Okay.
And I'm just looking for what is a key range. And that's where I'm going to try and find a trade. So looking back over this time, let's see.
Want to draw me a range?
Yeah, what I've done is I've set this up to be this the one. Oh, so no, this is the weekly pivot and this is the daily pivot. Okay. Yeah, so this blasts out of here, and so I think I want to like when this breaks out, this is where I want to go because that's a.
You see the daily weekly stack? I mean that.
Right there.
Just they're on top of each other. Yesterday.
Yeah,
Look at
that's what I'm
yesterday's
saying right now.
CPR.
I'm gonna look for a long there.
I love when they're stacked like that.
Okay, so I'm marking this, and then I'm gonna go down. This is what we were talking about earlier. I've been doing some research on the time frame spacing, and I have come up with something approximately along the lines of you want your time frame to be at 200 to 300x from top to bottom. So if, for example, I were starting on the 1 minute chart, I would say I'm going to use 3 or 4 time frames, starting with 1 minute all the way up to the 300-minute time frame, which would be 5 hours. But I'm just going to fudge it a little bit and say we're going from the 4-hour to the 15-minute to the 3-hour time frame. Okay, just for fun.
You mean 3 minutes?
That spacing, I'm going to use those time frames. I'm going to use more par, but I'm using those time frames to find my trades. So I'm going from the 4-hour. I found a zone where I want to play. Then I'm going to the 15-minute.
Why that zone?
Well, because the big picture is where I want to start. I'm saying this candle right here closed and blasted out of this pivot, right? So this 4-hour candle closed right here.
Right.
Oh, that's god awful.
So why don't you use the whole candle?
What do you mean?
Or the whole body? The green box the range that you drew? Why did you...
This is just where I'm looking for a trade. It doesn't have...
all right. It's not, okay.
I'm not actually doing anything in here.
Okay.
But I'm going to pull up this range and say, okay, a bounce off of this CPR might be nice, but it looks like it doesn't give it. But basically what I'm going to do is I'm going to go to the 15-minute chart, and then I'm going to look at this zone. Let's say, okay, there, that candle closed. When does this candle close? It's not going to give me a long because the 3060 is already way up there.
Yeah.
But that's a par gap. This is my this is 3 and 6 minute.
The red ribbon is 3 and 6.
A divergence gap is what
It's
it
a
did.
divergence gap. But you don't want to take it until the 30 is at least flat. And you see that light blue candle, one more to the right?
Yeah.
Right there. Right there, the 30 and 60 are flat. And the 3.6 kind of gave a little bit of a bull div there. If you look at that little stab down on the 3 minute, the red line, right inside the green circle.
So this looks great. I found this is one of the things that we didn't talk about, but you've taught it a lot before on our Discord, and
this is a continuation.
This is a divergence gap where the 3060 has shot to the top, but it's got this big old thing here that is giving this empty space here.
Right.
And then the smaller time frames dropped. So first of all, my largest time frame, the 4-hour, I'm not looking at the 1 day time frame. Remember, I'm just looking at the 4-hour as my biggest time frame. It is below equilibrium, or it's below the center line, and it is aiming up. Okay.
Yeah.
So that's my big time frame confirmation. We're headed up on the 4-hour. Then I like this as this is a par gap short, but the 4-hour is heading up. So I would not take that as a short right there.
Okay.
Right.
But
then
you could have scalped that because it's a
legitimate. Yeah, you did get a bear div right here. But one thing I'm practicing lately is one thing I've been practicing lately is I'm trying to use divergences not just as entry signals, but as filters to keep me out of trades that I know are better. Okay, so there's a bear div from there to there.
Do you see that divergence gap.
Which one?
The bearish divergence gap of the 30, 60 over the 4 hour. Right there. No, right.
Oh,
You were
yeah.
right there.
So this right here, that gap, divergence gap there.
Well, I would have drawn that circle bigger. I'm not talking about the red ribbon. I'm talking about the yellow ribbon. Like capture all of that. Here, delete that one. Yeah, the yellow ribbon, right where it says bear. All right.
Yeah.
Right where it says bear. Draw a nice circle. Right there. Draw a circle there. There's your divergence gap.
You mean this whole thing here?
Beautiful. Yeah. You could have. That was a legitimate scalp trade.
Okay.
But
so that's a good short entry, but I'm filtering it out because it is against my larger trend of the 4 hour.
Sure.
I could take this if I was really, really experienced and I had confidence, or say I had taken a trade earlier today and I had won, 5 risk factors. If I had risked $100 earlier today and I had won 500, then I might be like, I'm feeling good. I'm going to take this short.
Yeah,
but if I'm struggling and I've had a lot of, I've had like 3 losing days in a row or whatever, and I'm just not doing well, this is where I start. I look at the 4 hour and I say the 4 hour is my guiding. The 4 hour is my North Star at this point. I started on that time frame. I looked at the CPR, the pivots extreme indicator that we have. And I said, okay, I'm looking for a long in this area because remember, the whole point is this is the weekly pivot and the daily pivot and the 4 hour pivot all stacked up.
Yeah.
And so I'm expecting this to be, see when I'm playing this out, and this is the real time, I'm looking at it right here, I'm expecting this to be really strong support, right? Yep. So I'm patient. I'm seeing this bear div, and instead of going, oh, short, I'm thinking to myself, ooh, this means I'm about to get my longs. Wait for it. Then it dips down, and that's where I see this 15-minute gives a bull div. So there's that, right? Let me see here.
Yeah, let me tell you just a simple sentence on that.
Okay.
The 4 hour is trending hard, and price is coming to retest a very strong support. So yeah. You don't really.
There we go.
You don't really need to take that scalp. I mean, it would have worked, but it's not something I would recommend. But I'll play them if like that's the moment I'm sitting at the computer. Right.
Say we could. One thing that might help is say the 4 hour was flat in the middle right here. We could say, all right, I'll take this short, and then if I get the long signal, I'll just flip the short into a long at that level, and call it good. But so going down the checklist, I want to go down the checklist. The for me, rule number 1 was on the biggest time frame, whether it's the daily or the 4 hour or whatever, I'm looking for a range, a zone to find my trades. I'm using the pivots extreme to do that, but you can use market structure, fair value gaps, whatever. You can check the squeeze. You're just trying to find a zone. That's step 1. And then I'm going to, I kind of reorganized your steps here. Step 2 is I go down to the 15-minute time frame and I look for this bull div right here. Is giving me that signal. And then also on the smallest time frames, I'm using the 3-minute and the 6-minute ribbon.
Mm-hmm.
It's also giving me a bull div right there as well.
Right.
And so I have that final confirmation from this is giving me a bull div here. That's real nice. And then also, as you pointed out, this, I'm going to bet, let's go down to the 3-minute time frame. There it is. So there is my 3-minute time frame. I'm going to hide this so I can see it better. this 3-minute time frame is having a lower low close right here. Oh man, this is going to be frustrating because look at that. Here's where I would have gotten in on this crossover. So this is the one of the final steps on your list. My smallest time frame has crossed above and closed. So I would probably get in to a long at the close of this candle right here, maybe, and put my stop loss below that low.
What's the
That-
green line?
These are just my bull divs. Let's hide pivots.
I'm talking about par, the par green line.
15 minute.
All right. The par green is 15. All right. So you have, so right there where you would have taken that bull div on the 3-6, you got the 15-minute coming down hard, the 30 coming down.
The 15-minute hasn't rolled over yet. You're right.
The 30-minute is coming down really hard from overbought, and the 60 is also turning down. So
Okay,
yeah,
so that's where
that
you
shit
caught me.
kept
I
you out.
forgot to check the middle time frame and get my confirmation from the 30-60.
Yeah.
And that's where I would have to wait for this to either flatten out, but it's in premium, it's above the midline, so I probably wouldn't be able to take this particular long, even though, you know, it's giving me a real nice setup right here. But this is not reversing. I guess that's where my final judgment call is. I want to see at least 2 divergences, and I've got that on the 3 to 6 minute and the 15 minute. I've got divergences.
I don't
So
think
that
you
could
need-
give me an entry somewhere around here, even though the 30-60 is aiming down. But it's not a perfect setup, and if I'm having a bad day, I'm not taking this.
It's not. You don't need divergences on 2 ribbons. If you have it on the lower one and the other one is it's a bullish situation, then you can take it. And I would say another nuanced rule is from all the years that the one time frame that I think is the most important not to trade against is the 30-minute. I don't know why, but that 30, I mean, I've written that down more times than I can remember. And the 30 is the white line, right? The second
Yeah,
that,
my 30 is white.
yeah, and as soon as that